Welcome back to the podcast, guys. I've got Dhana with me. I hope you have a wonderful weekend. It's a Saturday, Sunday. So hopefully we either will manage to compress what we want to speak into this episode and have something fresh for you. If we tend to overshoot, then it'll be cut into two parts and you'll see Dhana doing his magic to the video and you'll see it in two sessions. Last week we had spoken about some stocks and we had left some out. So Dhana wants me to talk about those. And before that, he has some other news which he wants me to touch on, which he has some doubts with, which I'll try and clarify for him. And hopefully, as I always say, there'll be something of interest to you in that, and you'll be able to pick up on something and learn something too. Yes.
When I come into the market, sir, I see the Nifty around 18,000. Right now, it was overripe.
Let's see. Today is an interesting day because the market is, like you said,
Yes, sir.
it has gone to they've broken the doors.
It's a new benchmark level.
Yes. The doors of
25,000, sir.
Vaikuntham are open.
Nifty has reached today 25,000.
Yes. Go in there.
And Sensex also hit 82,000, sir. And Bank Nifty hits about all-time high of 53,000 in this week, but today it was in drop. So right now, all the indexes are showing up. It was a good all-time high, right, like that.
When you take a can of soda, right? Pepsi can or a bottle, you shake it nicely, then you open it. It goes up, but it doesn't go up forever. You may shake it very well that all the Pepsi leaves the can. This is what the market is going through right now. Shooting. But we do know, sir, we're not in space. Gravity will kick in sometime and then it will take a U-turn. What has been shooting up and start falling.
So right now it's a overheated market.
Yes, and it's been overheated for some time. It's not something new. It's not something we have not spoken about. We have spoken about this all the time. That's why we go on telling you, buy value. Instead of randomly picking up things which are all overvalued, look for value in the stocks you're buying and see the bargain. Like even in a place where there's no sale, you walk into the shop, there'll be something which is old stock.
Okay.
The guy doesn't want it anymore. There's nothing in sale. You've gone to the branded store, right? Everything is on full price.
Okay.
But some old kuppe from last year, fashion, didn't sell, will be in a small box in the corner in the shop, which will have some 10%, 20% discount. That is where I'm asking you to go look at.
Okay.
There, if you go and see, there are bargains.
Bargain also happen.
Correct. If you're looking at the entire shop, all the luxury watches you cannot buy because they're all current.
Okay.
Right? All the heroes are wearing it in the current movies and it's all selling through the roof at even 10%. Because they'll say there's only one piece available today. There's already one person reserved it. They'll say, okay, I'll pay 5% more. They'll say, okay, I'll tell that guy it is gone. And they'll give you extra. That kind of bidding war is what's happening in the market. So you look for value. You look for the discounts and you buy those. Because if and when the market corrects, these discounted shares will correct also. I'm not saying they will not correct. But the correction will be far less. So something that's falling from 100 PE to 20 PE will be very painful. Then having something at 18 PE going to 14 PE.
It will be much less.
Yes. It's like me punching you like this and me going like this. Right? This you won't mind. Hey, friendly tap. Okay, sir. Okay, sir. We are friends.
And you are...
Yeah, punch your face with this.
Sir, no.
Correct. You won't be able to see for a few days and then you'll never come near me again. This is what will happen to a lot of investors. They're going to get punched in the face really hard in this market when it corrects. And will correct. Don't know when. Because everyone's question is, sir, when is it going to? You're saying correct.
I'm also waiting for, sir, for the 1 year.
Please don't wait. Please don't wait. Like I said, there are thousands of companies. In those thousands of companies, there are at least a few hundred. Okay, like Anand has a few which he likes. I'm sure you will also have a few which you like. Which are doesn't have much debt, right? Negligible amount of debt. And it's trading at a price point which is reasonable. Doesn't have to be super cheap.
Okay.
I'm not saying, if you see the 10-year average PE, it used to be 22 and it's trading at 20, 18. It's still good. You don't have to wait for it to go to 12. Those are the companies I'm asking you to keep an eye on. Yeah. Because you can see the market. If you see this kind of a market, as an investor, I feel scared. Someone like you feels FOMO. You're like, sir,
sir, we are missing many of the stocks, sir.
Yes, you're like, sir, I wasted 1 month talking to you, sir. If I had entered last month, right, I would have at least made 5%, sir.
5%.
Instead of keeping my money in my savings account, I'd taken my salary and just thrown it in the market,
Just
sir.
1 month I can get up that.
Even now, if finance minister is taking 20% for short-term gains, I still would have been up, sir. That is the attitude I don't want. And that is the attitude which is prevalent in people investing now. It's not even investing, it's just gambling. Because, for example, Tata Motors, let's look at, I'm sure it's there on your list.
Let's jump into the topic, sir. Tata Motors is the first company. Right now, it's an all-time high of 1179. It's an all-time high of 1179.
Okay.
Let's hear about that company.
Yes. The funny thing is, Tata Motors was suddenly investors lost interest, right? And the price was correcting. If you take from May 10th, it was going down. Then the budget day, it dropped. 900 rupees. I think it was election date, election correction. It dropped to 900. From there, it's up almost 25%, 26%. So for every 100 rupees, you would have got 25 rupees.
Correct.
So you put 1 lakh, you would have got 25,000 rupees. So this is what's creating the FOMO.
Correct.
Because people are only looking at this.
And then another fear was coming, sir. It was in all-time high. When it drops, we will be something at.
Now, the funny thing is, Tata Motors even now is a value buy. But because you saw it at 900, you think, no, it's going to correct. It was at 900. Now it is at 1,200 because there's no logic in your thinking. You're just thinking it must correct. You think that it's already gone up. It will not go up anymore. In the short term, it's definitely going to come back to 900. So I will not buy Tata Motors. You will go buy something like a Reliance, which is at tremendously crazy PE. Or let's say in Tata Group itself, you'll say I'll buy a Titan. Because Titan has not moved so much. Titan, if I see for the same 3-month period, it is down 3%. So while Titan has a potential to go up because it's down 3%, it will go up by 3%. Tata Motors will correct by 5%. These are kind of convoluted ideas you newbies have, right? The Gen Z.
The same mentality I am not trying.
Yes, you will have this attitude. You will forget the company and everything. You're just looking at the chart. And you'll be
Yes, sir. If we are
it is going down. This is also a good company.
If it's down, it will up. If it is up, it will down.
Correct. This is a good company, sir. That is a good company. So this will go, I'm buying down, it's going down, I'm buying it. I'll hold for 1 month. This will go back up. Tata Motors will correct. I'll sell this and I'll dive into Tata Motors at a good price. Doesn't work like that. And what will happen is, it will not happen. It may happen, but also it may not happen. And if it does not happen, like I said, in your face. And what will happen is, after that, you will never come near it. You'll say, sir, this is just gambling, sir.
Yes, sir. Stock market is a pure gambling.
Yes, it's terrible, sir. I put 1,000 rupees, thinking 5,000 rupees my salary, I put, sir, and
gone up.
Yes, now I just have some Kuppe shares. What Kuppe you have? I have Titan, sir. I bought it at some 4,000 rupees. Now it's trading at 3,000, sir. What will I do, sir? It's a Kuppe company, sir. I'll be like, dude, what are you saying? I want you to stop thinking it like this. So I want you to stop looking at price altogether. I only want you to look at PE. So from now on, don't look at Nifty's where Nifty is.
Okay.
That's useless for you.
Okay.
Right? It's like going to the gym and seeing one guy who's a bodybuilder. What does it do for you? Looking at him, you feel good about yourself? No. You feel nothing, right? Same way, you should feel nothing when you see the Nifty. Breaking all-time high, so what? All-time low, so what?
Because it was a breaking news, sir, today.
That's why. Because they're trying to build that into you. The whole machine is built to create a sense of FOMO for you. Like social media, all of it is constantly making you feel like you're missing out on something. You're not. Yesterday you didn't know anything. Today also you don't know anything. So what difference does it make to you? It makes no difference. Other than that, they've slowly got into your ear and they've made you feel like you're missing out something. So like I said, Tata Motors even now is something you should keep in your radar and consider.
Yes, sir.
Because when you look at the PE of Tata Motors, it's at 14. And if you even take a 10-year spread of it, it will still lower than what its average for 10 years is. So it's still a good buy.
Good buy.
Yes. And
yes,
even when today it's corrected slightly, right?
Yes, sir.
But in the last, because people are booking profit, Gosamis like you would have bought it, right?
Like us.
Yeah. I'll be like, okay, this is as high as it gets. Let's book profit and buy Titan. Titan is correct, gone down by 2%. I'll sell all my Tata Motors and I'll buy Titan today.
Please don't do that.
Yes, because what most important thing you're not calculating in all your calculations is the government is taking 20% of every rupee. For every 1 rupee profit you make, 20 paise goes, which is going to take from you.
It's a short-term capital gain.
Correct. Because it's less than a year.
Yeah.
So if you thought you made 2,000 rupees profit, my friend, you didn't make 2,000 rupees profit. You only made 1,600. And you don't think that. Because at that moment of excitement, you're like, sir, I made 2 lakhs profit. No, you didn't. Only made 1,60,000. And when you look at it, 1,60,000, and you look at all the other costs involved in it, suddenly it's all gone.
Correct, sir.
So as far as Tata Motors is concerned, it's still something you should consider.
Yes, sir.
What is the next one, Jay?
Next one, Federal Bank, sir.
Federal Bank. Let's see where Federal Bank is.
We are not speaking about one, sir. Federal Bank.
Because the banks...
Many of them are holding right now also, sir.
Yes. The problem for me in Federal Bank is the book value. Price to book value, if you look at, it's gone to almost 2. Yeah. 1.9, 1.4. Yeah. So that, it's trading at its high of 52-week high. So I would rather look at some other bank if banking is what you're looking at. Because let's say instead of Federal Bank, we look at
Karnataka.
Yeah.
That's also in our list, sir.
So see, price to book value. Though it's trading at...
It's below 1.
Yeah. It's below 1. So the reason why we say this, if you take a bank like HDFC, its price to book is at
almost 3.
Yeah. So
2.7.
Yeah, this is where most Indian banks price to book value will go above 1. Right? So when it's below 1, you're actually buying it at value. That means per share, you're paying more than what the company is worth on the book. In banks, what is that? Nothing but an amount of deposits and amount of loans.
Correct.
So everything minus plus you put, actually if you pay 100 rupees and it's below book value, you're paying 100 rupees and getting more than 100 rupees. In technicality. Yeah. So that's why it's trading. In case of HDFC, for every 100 rupees you're putting, you actually, if something happens, you will only get 40 rupees back.
Because the price to book has been...
It's been inflated. So there's a lot of growing opportunity in banks and financial stocks. You should always look at price to book. Yeah. That is the only important thing. Everything, PE is a waste, and all other stuff is a waste.
Book value, sir?
Price to book is what you have to look at. Book value you look at. But what is the book value significance? One even look at it to the price. It has a book value, right? Banks will have all financial institutions will have book value.
Correct.
But that value is useless. It's like just having earnings per share. What do you do with earnings per share? Unless you have a price to compare it with, you do not know if you should buy it or not.
Correct. The comparison we didn't have, then EPS is also waste.
Correct. So that's why price to book is what you should look at, that ratio.
Okay.
And if you look at it like that, Karnataka Bank is a far better something to consider compared to Federal Bank. Nothing wrong with Federal Bank.
Yes, sir.
It's a very big bank. Compared to Karnataka Bank, so market
now,
capitalization is only 8,900 crores, while this is 49,500 crores.
50,000.
Right. So, if you look at it like that, Federal Bank, yes, but
it's a good, but right now
we want to buy value. Like I said, the Nifty is rising everything up because the markets are going up. Money is coming for everything. I'm not saying nothing wrong with Federal Bank, but Federal Bank, when it corrects, market corrects, will go from 203 rupees, will go to 100 rupees. And that will hurt your heart like nothing else. While Karnataka Bank from 230 rupees will probably go to 190, 180.
It will not hurt more.
You won't feel like the loss. Where there it's become 50% loss. Here the loss will be like 10%. It will also correct. But you won't feel so bad. You will continue investing in the market and continuing playing the market. If you see a drop of a value, your 1 lakh becoming 50,000 rupees in 2 days. Even if you have bought, like I said, you have Titan. It's kupa. It's just trash. Just gambling, sir.
Correct, sir.
You will feel like that. You will feel like the Tata themselves have done this to you. They have not done anything. It's just your exuberance which has done it.
Yes, we are falling into the trap and we are feeling like that.
Yes, and you will want to blame everybody and anybody who comes. You will never see your role in it.
What's our role is the main thing we need to understand.
Because you got greedy, you were looking at small information, not looking at the bigger picture, and you got carried away. That's why I always say slow down. Like driving a car, driving motorcycle, they always say slow down. Why slow down? For the simple reason is, even if you're driving very carefully, someone else can be driving rashly and they'll hit you and then you have an accident.
Correct.
Same thing in the market. You may be a good boy. You might be do everything. Then one Harshad Mehta is inside the market. He throws everybody into a tailspin.
Correct.
You will also get hurt. And if you get hurt in like a Harshad Mehta scam, hurt happens to you in the market, like I repeatedly say, you will never come back to the market. Even if you're a value investor, you'll feel scared to come into the market. Because that's where the market is sitting. It's sitting at such a high. Well, all kinds of records are breaking. And any TV analyst you look at, social media analyst you look at, they go. From here, we are going to be touching 40,000 in next year. And you'll be thinking, Baba,
we are feeling something.
That? Yes.
We need to go.
Yes. If it's all going to double, then I better leave all my money there. Put all my sell all my gold also and put it here.
And a
it'll
sudden
all,
option.
yes, next year it'll all be double. So that fear is something you should be mindful of.
Okay, sir.
And everyone who watches our videos is thinking of the same thing. They're looking at our videos thinking we're going to give some secret. And that's my biggest fear. We're looking for some secret sauce and there is no secret sauce.
We didn't have anything.
Yes.
Like,
Yeah. And you're only going to hurt yourself.
correct, sir.
Next one.
Next, we are talking about Federal Bank and Karnataka Bank also.
If you're looking at investing in a bank or a finance company, you can consider Karnataka Bank.
Natco Pharma, sir.
Yes.
Or what?
Now let's talk about NATCO. It's another